So many people today are aspiring to invest but have a problem with where to put their money in a passive investment vehicle that will give them a guaranteed income periodically. In my today's episode, I want to take you through some of the passive investments that you can put your money and secure a return from your investments. Let's look at investment in unit trust. A unit trust is a type of investment that pools resources from different investors and invests them through a fund manager who is a qualified professional to invest in different classes of assets. We want to discuss on some various types of unit trust. And number one, we want to look at equity fund. An equity fund is a type of investment that's available to investors who really wish to invest in securities but do not have the professional knowledge and experience to invest in such securities. So what happens? They take their money and invest through an equity fund, where now an individual or an institutional investor takes that money collected from different investors and buys different securities at the Nairobi Stock Exchange. This allows such small investors to be able to enjoy from the economies of scale and also diversify their portfolio of investment by investing in different classes of assets that would otherwise be difficult for them to gain access into such huge investments that would require a huge chunk of capital. The other way you can invest through a unit trust is through the money market fund. A money market fund is a low risk investment. This is an investment that has a low risk, but at the same time it gives you a guarantee of a fixed return from your investment. This type of investment is available to fixed deposit account holders and also investment in treasury bills. They are also medium risk investment vehicles, which means that in the event of any market failure, you are likely to suffer a moderate risk of loss. The other way you can invest through unit trust is through balanced fund. A balanced fund helps you to diversify your portfolio of assets so that you reduce the risk of loss from single asset investment. This helps most individuals that from different industries and companies. So in the event that one industry fails, you are guaranteed of returns from another industry. That helps you not to suffer a huge loss in the event of any market dynamics. What you should also know is that you only need as little as 1,000 shillings to be able to invest in unit trust. So those small investors who are not able to single-handedly invest in huge capital requirement investments can tap into this type of investment and still get some income out of such investments. The other way you can invest your money in passive investments is through investment in SACCOs. A SACCO is actually a member-based financial institution that operates on social values and social responsibility, which means the conventional SACCOs had members from certain affiliations. Initially, you'll get, for example, Police SACCO was majorly patronized by police officers. Mwalimu SACCO was patronized by teachers. Harambee SACCO was patronized by a certain affiliated membership. However, today SACCOs have now opened up their net to other members of the public who are not affiliate members of certain social groupings. So today you can invest in Police SACCO and you are not a police officer. You can also invest in Mwalimu SACCO if you're not a teacher. There are some things that you actually need to know before you join in SACCO. That number one, you need to subscribe into the mandatory membership. of that SACCO. The mandatory membership is found through contributing towards the share capital. If you fully subscribe to the share capital requirements of a certain SACCO, you fully subscribe into the membership of that SACCO. And also what you should know is that a share capital is a permanent source of capital available to any particular SACCO that you want to invest in. You cannot therefore claim a refund of share capital when you want to exit such a SACCO. What you can only do is to transfer those shares to another existing member who will in return give you back your money as agreed. Or you can retain your share capital and benefit from dividends that are given annually. So those are the things you need to know. Also, you need to know that you can only borrow from a SACCO against your savings. Today, most SACCOs will give you a loan up to 3 times your savings, which means if you have 100,000 in savings, you can borrow 3 times that value. This means it will give you like 300,000. So without the savings, it's difficult to access the loan facilities of a SACCO. You should also be aware that before you get access to the loan facilities of a SACCO, you need to get guarantors. I've seen most people frustrated in certain SACCO because they cannot access the loan facilities of that SACCO simply because it's difficult to get the guarantors. Invest in a SACCO that is easy for you to get guarantors to guarantee you on the loan amount you are subscribing to. And that's why most individuals have stuck to their conventional SACCOs because it is easy to access guarantors in the event that you want to take a loan. This means that most individuals have maintained their affiliated groupings. If they are teachers, they're investing in Mwalimu SACCO. If they are police officers, they're investing in Police SACCO. So it becomes easy. If you want to take a loan, you can easily be guaranteed by your colleagues or friends for that matter. However, you can also invest in a SACCO that it is not an affiliate group of your profession, but still make friends with other people who can easily guarantee you against that loan. And you know, guarantors play a very vital role. In the event that you default in payment of any part of that loan, they will step in to clear the outstanding balance. This is why most people are very unwilling to guarantee individuals whom they don't know very well. It's never a pick and peel process when it comes to choosing which SACCO you put your money in. You have to know the reputation of the SACCO you want to put your money in. So many pyramid schemes today have masqueraded in the name of offering SACCO-related services, which is actually not the case. They take savings from their members and scam them in the process. So it's also important that if you are not very sure of a certain SACCO, you visit the website of their regulator, who is the SACCO and Societies Regulatory Authority. In short, it's called SASRA. That is the body that has been mandated the responsibility of licensing every SACCO that operates in this country. If your objective is earning dividends at the end of the trading year, join SACCOs that issue dividends. There are other SACCOs that do not issue dividends at the end of the year. They opt to take that money and reinvest in other assets. So you will be demoralized if you join a SACCO with hopes that they issue dividends at the end of the year and find out that they actually don't. Also, before joining a SACCO, know about the investment opportunities they give. Most SACCOs today, and especially the one that I personally subscribe in, have invested in their members by buying some plots and land for their members who now buy at a relatively cheaper price as compared to the prevailing market conditions. Guys, the next thing I want us to look is investment in stocks. In Kenya, trading in securities is done through the Nairobi Stock Exchange. And this is what I want you to know, that there are two markets for securities. Number one, we have the primary market. This market is specifically for a company that has gone public. Going public means a company being listed in the Nairobi Stock Exchange, which allows members of the public to subscribe into the shareholding of that company. The other way securities are traded is through the secondary market. A secondary market is a market for securities that are regularly trading the Nairobi Stock Exchange. For example, this page here on the daily newspaper has a list of companies trading on the Nairobi Stock Exchange. So what you need to know before investing in Nairobi Stock Exchange securities. Number one, you need to have a stockbroker. A stockbroker acts as an interface between you and the seller. So when you want to buy, you buy through a stockbroker. Similarly, when you want to sell, you sell through a stockbroker. That is a very important person in any trading of securities in the market. What you also need to know is that you must open a CDS account for you to be able to trade in securities. A CDS account is an account that allows you to transact in these securities. It's an account that helps you to track your portfolio of securities that you have bought from the Nairobi Stock Exchange. So it's a mandatory account that everybody who trades in the Nairobi Securities Exchange must have for any transaction to take place. The other thing you need to know is that you can only buy a minimum of 100 shares from one company in Nairobi Stock Exchange. You cannot buy less than 100 shares from any company trading the Nairobi Stock Exchange. For example, today, Safaricom's share is standing at a price of 24 shillings. You need 2,400 so that you can subscribe into Safaricom shares, which translates to 100 shares as the minimum requirement of securities from any company. On top of the 2,400, you will need to pay a brokerage fee to a stockbroker who facilitates the buying of those shares. So those are some of the things you need to know before investing in the securities market. But I have to issue a disclaimer statement. Before investing in securities market, do a thorough, fundamental and technical analysis of the securities you want to invest in. So many people have been hit hard below their belts by blindly investing in security market without knowing the technical and fundamental value of such securities they invest in. You have to know the financial health of that company. You have to read the numbers of the financial statements of that company. Have some little knowledge about the management of that company. You have to know the policies adopted by that company. Do not just invest in a company by basically looking at their price movement levels. That's a very technical analysis experience that is available to an average investor who suffers the most in trading of stocks in the market. Do a thorough search of those securities. I repeat this because I've seen so many people cursing investment in securities market because of lack of enough knowledge and experience in such stocks. Another passive investment is investment in risk-free assets. Risk-free assets are assets that have a low risk of default. So they are called risk-free because it's very unlikely for any government to default on its debt obligations. There are two types of risk-free investments, and these are treasury bills and treasury bonds. The government trades these securities through the Central Bank of Kenya. A treasury bill is a government security that is short-term in nature. It matures in less than 1 year of its trading. We have three types of maturities for treasury bills. Number one, we have the 91 days maturity, 182 days maturity, and the last one is 364 days maturity, which means as an investor you can choose to invest in treasury bills and select the maturity you want for your investment. You can go for the 91 maturity, 182 days maturity, or 364 days maturity, which also come with different rates of return. The other thing you should know about investment in treasury bills is that they are traded at a discount. If a security has a face value of 100,000, you might buy it at 95,000, but on maturity of such an asset, you will be given a full amount as indicated on its face value, which therefore means that if you bought at 95,000 shillings and on maturity you receive 100,000 shillings, you gain 5,000 shillings. So that is how you make a return out of treasury bills. The last thing I want you to know about treasury bills is that you can only invest in treasury bills with a minimum of 100,000 shillings. On the other hand, a treasury bond is a long-term government security with maturity date of more than 1 year. It can be 10 years, or even for other securities it goes to up to 30 years. So such securities are long-term and are available to those long-term investors who are willing to wait until the maturity of such assets. What you need to know about treasury bonds is that you can invest with as little as 50,000. Before investing in these securities, you actually need to open a CDS account. This account can be opened in the Central Bank of Kenya or its branches. Apart from the CDS account, you must also be an account holder with the local commercial banks available in Kenya, so that the CDS account is connected to your local account number in the commercial banks available in Kenya. The account number is where the proceeds from the matured securities will be deposited. So that is why you must have a local account number from the Kenyan commercial banks. The last on my discussion today is investment in real estate as another passive income investment portfolio. You can actually invest in real estate in two main ways. Number one, you can invest by subscribing to shares or securities of a real estate company listed in the Nairobi Stock Exchange. The other way you can invest in real estate is buying a real estate investment property like land or rental buildings. We have different real estate companies that are listed in Nairobi Stock Exchange. For example, we have Sendam Investment, and we also have Home Africa Limited Company. Those companies trade their shares in the Nairobi Stock Exchange, and their main business is investment in real estate. So as an investor, you can decide to buy shares from such companies and stand to earn dividends from such investments, or also earn from gains associated with the disposal of those shares to other people at a higher cost than you bought them. Real estate is one of the stable investments that you can put your money in. Anytime you buy a real estate investment property, you are assured of a capital gain whenever you dispose that property. If today you buy land or a plot for that matter, after 1 year later, you will dispose of that property at a premium. So guys, this is some of the most stable investment that you can put your money in and expect a guaranteed income return on your investment. I know there are so many other types of passive investments that I've left out, and if you know of any passive investment vehicle that I've left out, kindly drop in the comment section. And also, if you have any question, please drop in the comment section so that I respond to it. Those that have not subscribed to this channel, please do so. Subscribe to the channel and press the notification bell so that you can be notified every time I post a new video. Thank you so much for watching this video, and let's meet next time on my next episode.